flagship product. Obviously, this is our flagship product. We can never know too much, right? We can never know too much when it comes to IUL. Guys, I'm gonna say as a disclaimer, I love IUL, right? I am a IUL fanatic. I study this stuff a lot. I have a lot of books. In fact, I'm just going to share some books here that I have right now. So first off, and this, again, you don't have to get these books. I'm just telling you where I get some of my knowledge from because I love this stuff and I study it a lot. So one book is called Money, Wealth, Life Insurance, right? Money, Wealth, Life Insurance, how the wealthy use, not poor people, how the wealthy use life insurance as a tax-free personal saving bank to supercharge their savings. So this is one of my favorite. And one of my agent, let me see if she's on, is Karen on? Let's see. Shout out to Karen. Yes, she is. Shout out to Karen. She recommended me this other book called I.U.L Asap, ASAP, right? You gotta have I.U.L. Listen, when you read so many books, you know that this is the best thing, right? And again, you guys don't have to buy these books. I'm just telling you where I get my information from because I'm always, if somebody tell me tomorrow, oh, there's another IUL book, I'm going to be the first to buy it because I want to keep learning, right? The third book, and let me see if she's on. This is another agent also in WFG that recommended me this book. It is called Funny enough, when I did this webinar, 25 benefits of IUL, one of the agents said to me, Odetta, is this from the book Mark Kwan? And I was like, who's Mark Kwan? Like, I don't know who he is. No, these are my top 25 that I've amassed from just studying IUL. I've put together my top 25 benefits. And when she said there's a book that talks about it, I was like, really? What is the name of that book? Because again, I'm always looking for information when it comes to learning and sharpening my skills for IUL. So when she said about those 25 things, and she, mentioned the name of the book, at the time, I think she had only given me the guy name. So right away, I started Googling this guy, right? And I came up with a lot of similar names, but none of it was his. And then I said, by the way, what's the exact title of that book? She gave me the title. And actually, I'm going to share my screen, right? She gave me the title of the book, and it's called, and by the way, all these books, if you do, again, you do not have to get it, but I'm just telling you where I learned my stuff from and many other places, right? So the first one that I mentioned, Money, Wealth, Life Insurance, right? Money, Wealth, Life Insurance. The second one that I mentioned, I.U.L Asap, ASAP. Shout out to Karen. I see you're on. And I don't remember the third person. She's also in the business. And she thought that I had read the book and came up with my own 25, but I did not. It wasn't until after when she got on the webinar, she said, you know what, there's a book also that talks about 25 ways. And that book is this one, right? It's Top 25 Ways an IUL can secure your financial future, right? And then, of course, y'all know which one you absolutely got to get. Okay, let me put it in the chat. Which is the one you absolutely got to get? Like, you just have to get that one. I'm telling you, you got to get that one, right? Playground Millionaire, right? How to set your kids up to be millionaire. So this book, which is my fourth book, came about as a result of me being in the classroom. Some of you may or may not know, I'm a professor here in New York. I do a lot of career activities. I do a lot of career speech. I share a lot of information. So I'm always in the classroom. And I think it was this year when I went to do my career talks at 5 different junior high school and middle school here in Brooklyn. The teacher said to me, Daddy, you're so good with this stuff. And the kids are gravitating to this financial stuff. Have you ever thought about writing a kid book? And I said, I thought about it, but I don't know. I just never got around to it. I kid you not. The day that teacher told me that, I came home because I already have the content. Like I have a lot of content on YouTube. I have a lot of content in my head. I have a lot of books. And I just started writing, right? Shout out to Vern. Let me see if she's on. Shout out to Vern, who helped me put the book together. And then one of my students at St. John, who is like really, really amazing. Every semester, I make sure that my students, they have to do something that is not only tied to what they're studying, which is business. So this particular student, about 2 years ago, they had to do a project where they had to talk about 3 things that they're good at, that they can monetize, teach, or sell. And her presentation was, she authored a book, she published a book, like she did everything on her own. And I was like, when she did that presentation, it hit me that, hey, anytime I'm going to write a book, I'm going to have Gianna, right? Gianna's not on, but she's going to watch this recording. I said, I'm going to have Gianna do my writing for all my future books. She's amazing. She's professional. She's one of my A students. And she's also studying to be a teacher. So if I'm just putting it out there, because I have an abundance mindset. If any one of you ever want to write a book and you need somebody to do everything, you just give them the content. They do everything. They publish it. Gianna is your girl, right? I told her I'm going to tell all my friends, all my clients, all my business partners, if they ever need anybody to help them write a book, I'm sending them to you. She is a student, and she's super professional. She's on the money. Like she could be at her day job and I send her a text. She's going to be like, okay, I'll be on it right away. And then by the time she gets home, it's done. Like love, love, love Gianna. And of course, she's one of my A students. So she helped me write this book. So Playground Millionaire, again, is about 3 strategies showing parents how to set their kids up to be millionaires, right? And I'm sure you guys would all agree, if we were to talk to an adult about helping them with their finance, most people, unfortunately, are always going to say, I'm good. Do you guys get that? Do you guys get that? When you try to help someone with their finance or share information, you know, they're quick to say, no, I'm good. I'm good. I got a 401k. I'm good. I'm saving money. I'm good. Well, when you talk about, hey, let me share some information for your kids. How would you like to set your kids up to be a millionaire, right? Now they're a little more receptive to hearing what you got to say. At least they're willing to listen to you. But when we go the adult route and tell them about their 401k and their 403b, they don't want to hear that. So Playground Millionaire is twofold. The first half of the book, well, actually a good chunk of it is really for kids, because in my findings, I realized that our kids today, you could give them $20 and they're going to blow it out like in the same hour, right? When I poll these students, when I do these career talk, most of them, I hear they're spending, they're getting allowance, they're spending, but not many of them are even thinking of saving, right? So the first half of the book is to help the kids start learning about money at their level, right? And then the latter half of the book is for the mom and the dad. It's for the adults, where I share 3 strategies how to set their kids up to be a millionaire. And we already know what the flagship strategy is. Hence why we're here today to talk about IUL, right? That's what we're talking about today. So I want to help you guys understand, if you are a client or a potential client or a guest or one of us, right? How easy is it? And more people are learning about IUL. It's getting like all over now, right? If you tell somebody about it, they would have already heard about it. Maybe they don't know much, but at least they heard about it. So my name is Odetta King. I'm the author of 4 amazing books. The first one, If You Ain't Stacking, You Drop In, because girlfriend, you better be stacking those coins. Boyfriend, you better be stacking it, because everything is going up, nothing is coming down. So we got to stack, right? And then my second book, I realized, guess what? They're doing a whole bunch of stuff, and the things that they're doing is why they're broke. So my second book was, This Is Why You're Broke, right? And you could be making money, you could be saving money, but you're still gonna end up broke. Do you guys realize that? How sad is it that, I mean, we probably all know somebody who had a lot of money at one point. They had a lot of money at one point. Life was great at one point. Money was coming in at one point, but they still end up being broke. And guys, I'm not making these things up. I do this business. I talk to clients, right? I remember speaking to a gentleman from Florida, and he said, Odetta, where were you 10 years ago? I hear it all the time, like, where were you? And I'm like, why? Because I wish I had known this information years ago, right? So even though, guys, it's scary. This is why I wrote, this is why you're broke. Even though we may have money, we got to know this information. If not, we're going to still end up broke. We're going to still end up broke, right? Third book, Let's Get Rich, because now you know what to do from reading This Is Why You Broke. And now we put a game plan. Now we're journaling. Now we're doing our money mantra affirmation. Now we got our budget. We got our goals. We got our investment. We got everything mapped out in Let's Get Rich Journal Planner. And in my fourth book, Playground Millionaire, which again is really to help parents, but we're going through the kids route because it's easier for a parent to do something for their kids. And once we open up the gate, then they're willing to listen for themselves, right? So let's talk about the 25 benefits of IUL. First, I have to say, did you guys know that they are threats to our money? Yes. Did anybody ever thought that there's threats to your money? Like, yeah, if you don't know it, that's why you're going to be broke, right? Number one threat to our money is inflation. Y'all, everybody is feeling it right now, whether you're wealthy or not, whether you're rich or poor. There's an article that talks about even people who are making $250,000 are feeling it. We're spending more for everything. So inflation is the silent killer, right? That's going to trick our money. So inflation, cost of living. Let me ask you guys, put in the chat. Do you think inflation is going to go up? Do you think cost of goods and services is going to go up or it's going to come down? The longer we live, are things going to get more expensive or is it going to get cheaper? Is it going to increase or is it going to decrease? Well, some of you are probably saying, Odetta, that's a no-brainer. Of course it's going to increase. I mean, I live in Brooklyn, a house in Brooklyn, a two-family house in Brooklyn, like 7 years ago was like 300,000. Today, a one-family house is like almost 700,000, right? Second threat to your money is stock market risk. Do we think that the stock market is never, ever, 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 ever going to go down? Are they ever never going to have any downturn, any volatility, no decrease? It's always going to be up, right? That's a no. Stock market is going to go up and stock market is going to come down. And when it comes down, that's when nobody wants to talk about it. Everybody is silent, right? And yes, it will come down. And the third risk to your money is taxes. Well, taxes increase. What do you guys think? Are taxes going to increase or it's going to decrease? Put it in the chat. Of course. Yeah, it's going to increase, right? And for the folks who say, no, it's not going to increase, we'll just direct them to the usdebtclock.org. That's all I got to say. Just go to usdebtclock.org. That is the United States government website that tells us as a country how much in debt we are. There's more red than green on that website. So if the country is broke or the country is in debt, that's why they're constantly cutting these benefits. You have to increase taxes. All form of taxes has to increase, right? So because these are three major things that you and I cannot control, it's a threat to our money. And this is why the IUL is amazing, because the IUL is going to help us mitigate these three threats. What we cannot control, we have to ensure. And not just with any type of life insurance, IUL specifically, right? So with an IUL, a lot of you might, we may sit with clients and they say, well, Ladetta, I don't have any more money. I'm already putting money in my 401k. I'm already putting money in the bank. I'm already putting money in a susu if you're West Indian like me, right? No, honey, we don't want you to go find more money. We're going to teach you how to reposition your money. That's a word that I use all the time. We're going to reposition. Somebody type it in the chat. Get familiar with that word. All we're doing is we're educating our clients and we're repositioning the same money that they're putting in their 401k, 403b, IRA, 457 in the bank, at the susu. Y'all, I had a client that told me on Sunday, he's like, Odetta, I'm getting my susu hand, like 20 grand. And I'm going to call you. Yeah, that's because I educated her on repositioning the money, right? Because with the susu lady, you didn't get any interest. You didn't get any interest. You didn't make any interest. And if you had passed away, the susu lady probably didn't, if your family didn't even know that you had a susu, if she's an evil person, she probably wouldn't even give your family that susu money, 20 grand, right? So all we're doing is repositioning the money from one pocket that has holes. And what are those holes? Taxes, stock market risk, and inflation. So we're moving the money from the one pocket that they're currently putting it, and we're putting it in this other pocket that don't have any holes, right? Because the interest is high enough to beat inflation. The money is in an account where you never lose when the stock market go down, and it's tax-free. Like, okay, it's a wrap. This webinar is over. I've already done my part. No, I'm just kidding, right? So guys, do you see how right off the gate on my first slide, like that's it. That's it. This is why you need to do this. Like, this is why you need to have an IUL to mitigate these three major threats that will happen to all of us. So now that we know better, we're going to do better. We're going to save smart. It's not only about saving money, it's about saving money smart. And that's another question people, like, when you ask people where are you saving? They're going to say, yeah, I'm good, I'm saving. Well, no, the buck doesn't stop there. My follow-up question is where? Where are you saving that money? Where? We already know where for the most part, but we're still going to ask. So let's talk about the benefits. Number one benefit, a plethora of tax benefit. Wealthy people understand the tax game, right? Number one, tax-free debt benefit. IRS code 101A. What does that mean, Odetta? When I pass away, that 3.5 million, all of it, not a penny goes to Uncle Sam. All of it goes to my ear. That's the debt benefit. All of it. All of it, tax-free. IRS code 101A. Guys, there's people who do taxes that don't even know these stuff. I recruited Imara. Shout out to Imara. Imara is a tax professional. When I met her 3 years ago, she had never heard about the IUL. When I told her about the tax code in an IUL or life insurance, for a matter of fact, she was like, wow, but she does taxes. She does taxes. There's a lot of tax professionals do not know these codes. And why should they, right? Number two benefit, tax-free gain on your money. So again, you're growing this money, but you didn't think that you're going to have to pay tax on the gains. Yeah. Your 401k, you're going to pay tax on the gains. The money in the bank, you're going to pay tax on the gains. Your 457, you're going to pay tax on the gains. So what does that mean, Odetta? Well, you started with $100. Your $100 grow to $500. Well, that $400 gain, you're going to pay tax on it. You're going to pay tax on the gains. IRS code 72E, tax-free. Guys, tax-free money means more money. I don't think a lot of people even understand that math. Tax-free money means more money. Yes, Barbara, we got to save smart, right? Number 3, tax-free loans. Tax-free loans. IRS code 7702. Guys, if you read any one of these books, these IRS codes are in all those books I just mentioned, right? So is it a big deal to have tax-free loans? Absolutely. You can't get this anywhere else. Number 4, tax-free retirement income. So all the cash value that's building up in your IUL is tax-free. Tax-free money means more money. It's tax-free. Guys, is Richard on? Okay, Richard and I just got off a client call. The client has money, but guess what? What you're telling me is not what you got. What's on your 401 statement, it's not what you actually got. Your 401k statement might say you got 500,000 on paper. That's not what you got. Because Uncle Sam is going to come and sweep up the taxes because you never pay tax on it. IUL is tax-free. What I see in my IUL cash value is what I'm going to get tax-free. I don't have to subtract and minus and back out or wonder what is going to be, how much I'm actually going to get. No, I don't have to do that math. What I see in my IUL is tax-free. And tax-free money means more money. Because if you and I go to the dollar store and the guy said, you know what, because you're my friend, you always shop here, don't pay me no tax. Instead of 107, because let's say I buy an item for 99 cents, $1, right? Tax on that is 107. If the guy said, you know what, don't worry with the tax. You're my friend, Tamika. You always come and shop here. Don't worry, just give me $1. Just give me $1. Forget the tax. Honey, you just saved 7 cents. Instead of giving him 107, which is the tax, he said, just give me $1. You just saved 7 cents. Now, I'm giving you a very, very basic example. But guys, we're spending money. We're spending money, right? Number 5, long-term care. I didn't say it. Google the statistics. We're gonna get sick. Some of us, I don't want to say it, but life is gonna happen. Life is gonna happen. And when you and I get sick, the mortgage still gotta get paid. The kids still gotta go to school. Geico still wants its premium for the car insurance. If you got a car loan, they're gonna come for their car if you don't pay them. Your rent still gotta get paid, but you're sick. You can't work. Then what happens? They don't care. This is America. Somebody got to still pay the bill. But when you have a long-term care rider, you could breathe a little better, right? Terminal illness. What is terminal illness? God forbid the doctor says, you're going to die in 4 months, 6 months, 3 months, 12 months, whatever. They put an expiration on your life. Well, now the terminal illness rider in an IUL, you can accelerate your death benefit. So if you were insured for $500,000, you could start spending that $500,000 all the way down to like $10,000 and just leave back $10,000 alone. Maybe we never have to use it, but it's good to have it, right? Number 7, chronic illness. What is a chronic illness? A condition that lasts 1 year or more that requires ongoing medical attention, or it limits your daily activities. Can anybody put in the chat, what are some examples of a chronic illness? Again, you're not dying, you're not gonna die, but for the rest of your life or for more than a year, right? For more than a year, you got to take care of yourself. You got to take care of yourself. You need help. Ongoing medical attention. You're always going to the doctor. Yes, asthma. There's so many people still going to be like, you're going to be taking pills forever. You have to constantly be going to the doctor forever to just make sure you're managing your illness forever. My mom is a chronic. My mom has a chronic illness, her diabetes. I remember for the longest while seeing her inject herself in her belly. Every day she has to inject herself. Right? Type 2 diabetes, lupus. Yeah, these are chronic illnesses. So if it's a condition that lasts a year or more, and especially if it limits your daily activities, you could get a check, y'all. This is more ways we're showing people to have more money. And then critical illness, which is a big one, cancer, heart attack, stroke. These are the three major ones that are like sweeping the nation. And again, it's good that people are not dying as much from these illnesses, but it's affecting them big time. Big time. I know somebody right now who sold his house that he owned for 20 years because he had a stroke. He still has a stroke. He's never recovered from the stroke. He cannot walk by himself. He has to walk with a walker. He cannot even climb his own stairs in his nice house. He had to make the first floor, turn a room into a bedroom, turn the sunroom into a bedroom. The bathroom to go upstairs and take a shower, he can't go upstairs to take a shower. So he doesn't take showers every day. Critical. A stroke that has never, ever reversed. His life has changed. And he's had this now for 9 years. 9 years he has not worked. 9 years, no mortgage. So it came down to, you know what? I might as well sell this house and get something than lose it and get nothing. He just sold his house this year after owning it for 20 years. Guys, that hurts. Like, how do you own something for 20 years and then an illness come and just knock you down? An illness come and knock you down and your whole life changed. And he had money. He had money, but not enough because nobody knew that they'll be sick for 9 years, right? Number 9, money for medical bills, deductibles, co-payment. Most people don't know medical bill is the #1 reason people go bankrupt in America. Yeah, medical bills. Medical bills, especially cancer, that will wipe out everything that you have in under 2 years. Under 2 years, it will wipe it out. It will wipe it out. Now, nobody wants these things to happen to them, right? But this is why I said when you have an IUL, you have a solid financial foundation. Number 10, money for experimental or alternative medical treatment. Okay, so maybe somebody got hit with cancer and they don't want to do chemo. They don't want to do the pharmaceutical, medical route stuff. They want to try alternative treatment. Where's the money for that? Because your health insurance is not going to pay for that. They don't pay for alternative experimental treatment. No. Right? Number 11, money for college, wedding, capital for business, or anything. So I did a review to one of my clients today who lives in Georgia, and they're saving for the kids, 2-year-old and a 1-year-old. They're saving for the kids' college. And I had to paint the picture. Listen, I know you came to me for college, but this plan is to set your kids up for their entire life. Yeah, college is going to be your first immediate option, but then after college, there's going to be other major milestones. And because you're saving in a plan like an IUL, you're setting them up for their entire life and not just for college. You see, that's another mindset that we shift because most people are only thinking college and then the child goes off and figure it out. No, I want my child or my family kids or my clients' kids. This is why Playground Millionaire was birthed, because we want to show clients that it's not only for college. We're going to set these kids up to be millionaires in their entire adult life. So there's money there for every milestone. There's money for a wedding. There's money for a car. There's money for a house. There's money to start a business. There's money for everything and everything, right? Number 12, the policy builds cash value that you can access while you're alive. So this is not the old type of life insurance back in the days where your parents just bought like a $10,000 policy for burial. No, honey, this is not a burial policy. This is a policy that's going to benefit you first while you're alive. Money for you first. Money for you first while you are alive. And then, yes, ultimately, because it's a life insurance, whenever we do pass, there's a death benefit. But this is money for you to access while you are alive, right? 13, money to replace a job loss. Maybe you had a great career. COVID came, you lost your job. You weren't working for 6 months, 9 months, a year. Well, you could pull money from your IUL. Or maybe you're going through a divorce, or you went through a divorce and you lost a lot of stuff in the divorce. Well, you have some money to hold you over. Or how about your escalating mortgage? Some people have a balloon mortgage, you have a variable account. And again, their mortgage payment are increasing on them. You have money to deal with these things if life happens. 14, greater upside potential. IUL average about 8%, 7 to 8% compound growth, not simple interest. What does that mean, Odetta? Well, simple interest is simple. Compound interest is interest upon interest upon interest upon interest. Banks are not going to give you compound interest. Banks give us simple interest. So when you have your money saved in something like an IUL, number one, you're getting a higher interest rate that's keeping up or beating inflation. And the money that's growing is also compound growth. 15, index strategy, which we cannot get this in a 401k, 403b, IRA, none of those traditional investment. You can get an index strategy. Index strategy are only offered with life insurance companies. Index strategies are only offered with life insurance companies. So how does it work? Your money is not invested in the stock market. It is tracking an index in the market, but your money is not in the market. It's tracking the market. So index strategies linked to stock market, but not in the stock market. So the protection from the market risk is what you're getting, and you're never losing money. Your money is like an escalator. It just goes up. It's never coming down because of these index strategies with an IUL. Your money is only going up. It's not coming down. Why? Because your money is not invested in the stock market where it's going up and down. No, it's just tracking the market. And because this is an insurance product, the contract gives us floor and caps. 16, lock in your previous gains and reset at a new account value. So let's say you have $100 in your IUL, the market go up, you make 115, for example, simple math, right? 115. But then the market go down, people who have money in other places, 401k, for example, that 115 now will come down. but we stay at 115 because we locked in our previous gain. And we're always starting from the higher number, whereas someone who has a 401k, if the market went down and they're back down to 100, now they're really just playing catch up for what they lost. But we, with an IUL, when the market go back up, we're starting from 115 to go back up. Whereas someone in their 401k, if the market went down and they lost money and they're back down to $100, their starting point is $100. So this concept is called lock-in and reset. We're locking in previous gains, and our new account value is that what we're going to reset and move from upwards. 17, this is a permanent policy, guys. I cannot tell you, this is a big one. It hurts me when someone call me in their 70s and in their 80s looking for life insurance, because at one point they had life insurance. At one point they had a job insurance. At one point they had a term. And guess what? The term end. They had it for 30 years. Let's say somebody is in their 20s or their 30s and they take out a 30-year term. Well, in 30 years, if you're still alive, you're still alive. Your term expire. So now the insurance company is going to happily send you another policy saying, hey, your 30 years is up. We could continue this policy for another 30 years, but this is going to be your new premium. This is going to be your new price. Most people, let me ask you guys something, put in the chat. If you took out a policy, a term, when you were in your 20s or 30s, you took a 30-year max. Now you're 50 something or 60 something, and you went from paying $50 per month to now $1,000 per month in your 50s and 60s. Would you keep that policy? For the last 30 years, you were paying $50. 30 years later, the same policy, same coverage amount is now going to be upward of $1,000. Would you keep it? Yes or no? That's a term. That's a term for us. The only way we win, unfortunately, is if we pass away within the term. If we pass away within the term, yes, our family would get the death benefit. But if we live beyond the term, we're still alive. Hey, we're still alive, right? We're still alive. And that's when somebody's going to say, oh, you know what? Call Blessing. She does insurance. She's going to get you a good insurance. Now you're in your 60s and 70s and you want a cheap price? It's not going to happen. So I always tell people, when it comes to life insurance, you want to get a permanent policy for your whole life. Your whole life. Your whole life. Don't get it for half of your life, right? Because all that money is wasted because you're not going to get it back. Now, some companies do have a return of premium term where you can get it back, but it's still not the best use because, yeah, you got it back, but not with any interest. You didn't grow that money in 30 years. You did not grow it. Yes, some of them will do a return of premium, but your money did not grow. They're just going to give you back what you put in. What was your premium? Not a penny more. The insurance company used your money though. They went and they invested it, right? Number 18, IUL has flexible premium and death benefit. You can increase your death benefit. You can decrease your death benefit, but you do have to do that within like the first 3 to 4 years if you want to change your death benefit. As far as the premium, it's flexible. They have maximum and minimum. So your monthly no lapse, it's your minimum rock bottom. Or you have your 7 pay, which is a maximum. The IRS says how much you could put into this policy. So it's flexible. If you start saving 500 and you realize, oh my God, you know what? Life is beating me up. I just lost my job. Bills are tight. Or then I got to decrease it. No problem. No problem. We're going to reduce it. It's flexible. Or you know what, you call me and say, you know what, the business is great. I just got another job. I got a pay increase. I got a bonus. I got a promotion. I'm making more money. I want to put more money. It's flexible. You can put more or you can put less. 19, you can get an IUL as early as 2 weeks old. Hint, hint, playground millionaire. If you know somebody that's pregnant or has a newborn, playground millionaire. We can get them an IUL as early as 2 weeks old. As long as they're born, they have a social and they're healthy. We're going to start mapping out their entire life. 20, no Social Security impact. What does that mean, Odetta? Well, most people, they can't wait to take their Social Security because they need the money. But if you were saving in an IUL all this time before, you have cash value. Instead of taking Social Security early at age 62, you could defer and take it age 70. Why? Because you could pull money out from your cash value IUL. And the longer you defer your taking income from your Social Security, if you go to the full retirement age, which is 70, you do get higher benefits. But the bonus, even when you start taking money from your IUL cash value, it does not count towards your earning income threshold. That's a game changer. Just doing this alone is a game changer, because most people, they're doing like a hybrid retirement. They're working 2 days a week, but because they're working, that income that they're getting is going to factor in with their Social Security. The government is going to tally up and total all of that. But if you have an IUL and you've been saving in one for a good number of years, and now retirement comes, you could delay taking your Social Security. But what about the people who don't even have Social Security to get? Or they do have it, but it's not going to be enough. Your IUL is going to be right there to help you in those times. 21, safety and certainty on your money. Listen, anybody with an IUL can sleep like a baby at night. We don't care what's happening in the news when it comes to finance. We don't care what company is going up or under. Insurance companies are stable due to state requirement. Your money is safe. In fact, you don't believe me? I'm going to show you another website, or give you another website where the banks are putting your money, right? So 22, you have guarantee on your money, that guarantee that your money will grow. You have peace of mind. I look forward to my retirement. I ain't got to worry if, oh my God, is the stock market going to crash when I'm 65? What the world is going to be doing, what the economy is going to be doing when I'm 65. No. I spoke to a client today. Her account value, what it is today, I told her, listen, we don't know if that's going to be the same amount you're going to have next week, next month, or next year. Because your money's in the stock market and there's no guarantees with the stock market. 23, easy access to your money. There's no penalty for taking your money soon. There's no 59.5 rule like a 401k. You try taking money out of your 401k and you're under 59.5 years old, there's a 10% penalty and you got to pay the tax. There's no application to take your own money. There's no credit check. There's no lending history. And the best part, you don't even have to put the money back if you don't want to. But if you know better, you want to put it back because you're going to use the IUL as your bank. You take out money to do whatever you got to do and you put back money, because guess what? When you want more money again, guess where you're going? Guess where you're going when you want more money again? That's the money well. That's the money tree. You talk about the money tree. This is the money tree. 24, that's how you become your own bank. We can design an IUL to hold a 30,000 premium or 300K premium or even higher. That's how you become your own bank. And the website I was telling you, banks already put in your money there, whether you want to or not, whether you believe it or not. Your money's already with insurance companies. Because if you Google this website, usbanklocations.com/bank rank, blah, 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 it's going to take you to all the banks in the US that have billions of dollars. Their tier one asset is with life insurance company. Most people don't know that. So when I sit with clients and I say, hey, how would you like to become your own bank? How would you like to skip the bank and become your own bank? You could do that, right? That's why I teach my clients, when you take money out of your IUL, hopefully it's to go make more money and put it right back, because you're going to become your own bank. When you want money, you ain't going to the bank. You're going to your own bank. You're your own bank. 25, build generational wealth. Leave a legacy that's all tax-free and doesn't go through probate court. So if you have kids, someday you're going to want to leave something for them and their kids. And maybe you don't love your kids, because I hear a lot of time people say, oh, well, I don't care about my kids. They're going to figure it out. But they sure love their grandkids. They sure love their grandkids. They may not love their kids anymore, but they love those grandbabies. I know my mom would love to leave something for Zay Zay, Corey, Kyra. She would love to leave something for them. Not me and my siblings, but she'd love to leave something for those grandkids. Leave a legacy. True story. My great aunt, when she passed away, she left $5,000 for my brother because he was the youngest. $5,000. That was a big deal. That was a big deal. And that was only $5,000. How would you guys feel if somebody in your family had left something for you? Big or small, they just left something for you. Just the thought that counts, that they thought about you. They left something for you. Doesn't matter how big or small. They left something for you. That says a lot. She left $5,000 to my younger brother. $5,000. Imagine if it was more. Imagine if it was more. All right. I wish I had known all of this 20 years ago. Yes, Steve. A lot of people say that, right? Somebody's asking to go back to 15 to 22. You guys will have a recording. So for timing, I have to keep going, but you'll have the recording as well. So bonus. Let's see if you qualify for an IUL. Do you have an IUL? Everybody, in my opinion, needs an IUL. Why? It's a staple to your financial foundation. Because you could have a lot of money, but you're going to pay tax on it. You're going to lose it when the stock market go down. And if you have a lot of money, that's all it is, just a lot of money. Life knocks you down, cancer hits you down, that money is going to go in a jiffy. Medical bill alone is going to eat it up. I have one of my wealthiest clients. He owns a couple of buildings here in Brooklyn. And he said, Odetta, as much as we have the money, when my dad was on his last days, it hurt us to spend all of this money. Even though we have a lot of money, we literally saw it like disappear. So much money was spending on the last few days. And they have money. He said, Odetta, because of what you told me, I have to get long-term care. I have to get living benefit. I'm going to tell everybody about this because I have money. This is what my client told me. I have money. And we see how expensive it was. They saw a lot of money went out the door in those last couple of months. And they have money. Imagine if you didn't. What kind of care would you get? Right? So I know some of you are probably saying, well, Odetta, you're only talking about the good stuff. You're only telling us about the good stuff. Tell me about the bad things now. Well, honestly, There's more good than bad. So at the end of the day, IUL is still winning, but I'm going to share with you some of the obstacle or the objections or the bad things about an IUL. But it's really not bad, because IUL is not like a bank account that you just sign and you put your social and you fill out some pages and you get it. No, honey, not everybody can get an IUL. So don't think this is a free for all. This is not a free for all. We would love it to be free for all, but you got to go through underwriting and you better be healthy. You better be healthy. I've had clients that are healthy and still didn't get approved. Can somebody put in the chat, how would somebody be healthy and still not get approved for an IUL? How could you be? Yes, every one of you will get the recording. The recording is going to be emailed out to you as soon as we end the webinar. So you'll have a chance to see the screen and also watch it back, and awesome, also share it. So how can somebody be healthy and still get declined? Yes, Gardy, you said it. Gardy said it. Reckless driving. Reckless driving. Yeah. Skydiver, your risk. Family history, yes. I have a client, he's healthy, but guess what? Dad died of a heart attack. The brother is on some pills for his heart. Oh, child, the insurance don't want to mess with you. Your family history is terrible. This is why when you go to the doctor, they make you fill out that intake sheet. What's your family history like? Do you have cancer in your family? Family history. And if you're reckless, you're driving crazy, you get in a lot of tickets, you got into accidents, you got a lot of points on your license. Yeah. And overweight. Yes. When I first started this business, my first year, I was so excited. This girl told me she's healthy. She's going to put in $500, and $500 was a lot of money back then. I mean, it's still a lot of money today. If you get a client that can save $500, you're happy. 5 years ago, I was even more happy. When she told me she's saving $500, she got a good job. She ain't got no kids. Man, I was so happy. I live in Brooklyn. I went to her house. We did everything. She got declined. Too short for her weight. They go by your height to weight ratio. She's healthy. Her doctor told her she's healthy. But are you really healthy when you're overweight? I mean, come on. I'm not knocking on anyone, but I'm just saying from a risk standpoint, or even from, your own, for your own wellness, right? If you're overweight, that's some concern, right? You got to start watching that. Misdemeanor and felony record, yes. Substance control abuse, yes. You could be healthy, but if you're up here smoking marijuana and doing drugs and all these crazy things, they don't want you. Like, you may overdose and kill yourself, right? Drunk driving, yes, all of those things. So the cons, and really it's really not a cons, but we could say it's a con. Not everybody's going to get it. Not everybody's going to get it, y'all. You got to qualify. Number two, if it is not designed and funded correctly, oh well, your policy can lapse, or it can lapse sooner. And you never want to have a policy that's going to lapse sooner than 100 years. Because what if you live until 100? What if you live until 100? Then now you ain't got no policy? You ain't got no life insurance? You ain't got no living benefits? You ain't got no cash value? No, come on, right? So it has to be designed correctly and funded correctly. If not, the policy will lapse, or it could lapse sooner. And then, of course, if it's not funded correctly, you're not going to have much cash value to take out. And also high cost of insurance. You can't put little money in and you want to take big money out. The math is not matching. You cannot put, everybody wants to put little money and they always want to think, oh, how much can I take out and how soon can I take out? Well, let me ask you something. How much are you going to put in? How much? How much are you going to put in? And how often are you going to put in? Are you just going to do $100, $200, and then you want to take a lot of money out? No, it doesn't work like that. It has to be designed correctly and funded correctly. You want a lot of money out, you better put a lot of money in, right? And number 3, there's this illusion of high fees. People say, well, Odetta, the fees are high. No, the fees are not high. And even if they're high, compared to what, right? So let me ask you this question. Do you want to pay high taxes that you don't get to keep anything of? Or would you rather pay fees, which in turn is giving you life insurance, living benefit, a dead benefit that's going to pay all tax-free to your heir, tax-free income that you could spend on yourself while you're alive? All day, every day, I'll pay those fees because I'm getting more bang for my buck rather than making a lot of money and paying a lot of tax and not getting anything in return for paying a lot of tax. I'd rather pay a lot of fees, but I'm getting more bang for my buck or more benefit because one day when I die, 3.5 tax-free minimum as of today, that's going to grow. God forbid if I get ill, what's 2% of 3.5 is what I'm going to have in living benefit to take care of myself while I'm alive, because the mortgage still got to get paid. I still got to eat. The lights still got to be turned on. The cable bill still got to get paid. So you tell me. Choose your heart, right? Choose your heart. So guys, that is the end of the presentation. We went just over 8 minutes. Please, please, please. Thank you guys so much for joining us tonight. I'm going to open it up for questions. But if you want to know more, like I said, a good resource is always stay learning. Obviously, that's what you guys are doing because you are in this webinar tonight. And let me end the recording. And if you have any questions, go ahead and put it in the chat. This way I could start reading your question and answering some of your questions.